Welcome to Investing in Mutual Funds, presented by Associate Professor Dr. Modzaki Awangchek from the Center for Actuarial Studies. Imagine standing at the crossroads of your financial journey, wondering how to make your savings work smarter for you. This lecture series is designed to guide you through the world of mutual funds, a powerful tool for personal financial planning. Let's explore how professional management and diversified investment strategies can shape your financial future. What will you gain from these lectures? First, you'll discover why people turn to mutual funds as a cornerstone of personal savings and retirement planning. Next, we'll break down the different types of mutual funds, each with unique goals and strategies tailored for various investors. Finally, you'll learn how to evaluate mutual funds using essential measures like return, cost, and risk, empowering you to make informed investment decisions with confidence. Why do so many investors choose mutual funds? One key reason is professional management. With experts steering your investments, you benefit from their experience and insight. But it's important to ask who manages your fund and what happens if the manager changes. Staying informed also means being aware of industry issues like the late trading scandal. Knowledge and vigilance help you make safer, smarter choices on your financial journey. Another major advantage of mutual funds is diversification. Instead of putting all your eggs in one basket, your money is spread across a range of investments, much like the colorful segments in this pie chart. This variety provides an added layer of safety, reducing the impact if any single investment underperforms. Diversification helps smooth out the bumps on the road to financial security, making mutual funds an attractive option for thoughtful investors. Let's talk about net asset value, or NAV, the heartbeat of any mutual fund. NAV is calculated by subtracting a fund's liabilities from the total value of its portfolio, then dividing by the number of shares outstanding. Why does this matter? NAV helps you understand exactly what each share is worth at any moment, allowing you to compare funds accurately and make better investment choices. Mastering NAV is essential for every smart investor. When deciding whether to buy or sell a mutual fund, it helps to understand the difference between managed funds and index funds. Managed mutual funds are guided by professional managers who actively select investments, aiming for strong returns. On the other hand, index mutual funds simply mirror the performance of a specific market index. This means you can choose between expert-driven strategies or a more hands-off approach that tracks overall market trends. Which style fits your goals? Here's an important insight. Most managed funds haven't outperformed the S&P 500 index over long periods. Index funds, meanwhile, usually come with lower expense ratios, often around just 0.5%. That can make a big difference over time. But whether you prefer active management or a low-cost index fund, thorough research is key. Taking the time to investigate your options helps you make informed decisions tailored to your personal financial plan. Curious about how to start your research? The internet is packed with reliable resources for analyzing mutual funds. Websites like Yahoo Finance, Businessweek, Morningstar, and Smart Money offer up-to-date information and expert analysis at your fingertips. By exploring these platforms, you'll gain valuable insights into fund performance, fees, and investment strategies, empowering you to make smarter choices. Dive in and see how easily accessible knowledge can guide your investment journey. If you're old school or just love flipping through a newspaper, learning to read the mutual funds section is essential. Look for details like the fund family and name, net asset value, which tells you the price per share, and net change, showing today's price movement compared to yesterday. Also, keep an eye on the year-to-date percentage increase or decrease for each fund. These numbers help you spot trends and make better investment decisions. Don't forget about financial publications. They're gold mines of information. Magazines like Businessweek, Forbes, Fortune, Kiplinger's Personal Finance, and Money regularly feature guides packed with details. For example, Money Magazine's Investor's Guide lists everything from fund size and actual names to past performance, expense ratios, and minimum investment requirements. These resources simplify complex data and help you compare options before making a move. Ready to take action? Opening a mutual fund account can be more accessible than you think. Some funds let you start with as little as $250. Open-end, no-load funds are often available directly from investment companies by phone, mail, online, or even through discount brokers. Prefer something different? Closed-end or exchange-traded funds are bought via securities exchanges or over-the-counter markets. The right method depends on your needs and preferences.